Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, October 28th. I want to turn our attention right now immediately to the gold charts. Let's take a look at how gold is acting over the last couple of days. Last week I told you that we'd probably see a test of support in this trend channel, this sideways channel here, and this long rising uptrend dating back to the beginning of this latest up move in gold back in August. And lo and behold, here we are. We have gold holding this support level quite nicely. However, I would not be surprised to see gold take a little bit of a decline here down to the 1250, 1260 level. That's only in the short term. It should not bother you one bit at all. The long-term trend remains decisively higher for gold. So does the intermediate-term trend. I would view any pullbacks in here either right before the upcoming midterm election next week or right after the elections as a great opportunity to add to long-term core positions in gold. I want to also right now take a look at the dollar index. Last week I told you that the dollar would likely find some support in the short term and try to rally a little bit, and that is exactly what's happening. We do have very stiff declining overhead resistance by this trend line here, which I'm clicking on here, and that should likely hold the dollar back from rallying any further. I would expect the dollar to get up to just about the 80 level on the dollar index and then turn back south. As I indicated previously in my commentary in my Uncommon Wisdom special updates, the dollar should never have fallen below this support level here, which is a cyclical support line, if it were not in a long-term bear market. The fact that it did break this support earlier, even though we are rallying back above it, is an indication that the long-term trend for the dollar remains lower. Having said that, we'll probably see a few days of sideways action and perhaps a little bit of a rally going into or immediately after the elections, and then the long-term decline in the dollar will probably resume, and quite sharply. I want to also take a look at the Dow. The Dow is very interesting in here. As I indicated to you last week in my video, these two light blue rectangles here represent what looked like a formation that could stair-step higher for the Dow. Now on Monday of this week, just a few days ago, we did get a new high in the Dow at 11,256. That's a new high for the recovery out of the March 2009 low. So it was a perfect test of my resistance level that I had pegged for you at 11,256. The Dow is still holding in here, which is quite interesting. I believe it's a subtle sign of the long-term underlying strength that we'll see in the Dow Industrials as the dollar declines. But like gold and like the dollar, we're probably going to see a bit of a pullback in here and some sideways trading action before any significant move unfolds in the Dow. I am still cyclically and technically and fundamentally looking for a sharp pullback in the Dow down to as low as Dow 9,000. However, there is a possibility if the Dow closes above 11,256 on a daily basis that decline may be ruled out on a cyclical basis and we could see further gains in the Dow. It's too early to say, but I know my line in the sand, and that is a close above 11,256. I will keep you very alert to what's happening there. If it's time to make a move on the upside, preparing for another rally in the Dow, you'll be the first to know. Until then, I remain with a bearish bias on the Dow at this time. Till next week, this is Larry. Have a good weekend.